Have you ever looked at your bank account, seen a decent six-figure household income, and still wondered where all the money goes? You're not alone. It's a frustrating feeling, right? You've done everything you were told to do. Got a good education, built a career, maybe you even have a partner doing the same. You're bringing in what should be a comfortable amount of money, yet you feel like you're just treading water. This isn't just a feeling. It's a very real phenomenon that's getting worse, and we're going to call it the two-income trap of 2026. Let's dive into why earning a six-figure income as a couple doesn't feel like the financial freedom it once did. The world has changed dramatically, and the old rules of money just don't apply anymore. First, let's talk about the elephant in the room: inflation and the cost of living. The numbers on your paycheck might be bigger, but the purchasing power of each dollar has shrunk. Think about your grocery bill. Remember when $100 could fill your cart for a week or two? Now it barely covers the essentials. The price of food, gas, utilities, everything has been on a relentless upward climb. This silent tax eats away at your income before you even have a chance to spend it. So, while your combined salary looks impressive on paper, in reality, you're running on a financial treadmill, working harder just to stay in the same place. Next up is the big one for many families: housing. The dream of homeownership has become a financial nightmare for many. 20 or 30 years ago, a single modest income could often secure a decent family home. Today, in many major cities and even their surrounding suburbs, two professional incomes are barely enough to get your foot in the door. Mortgage rates have been volatile, and home prices have soared to astronomical levels. So, a huge chunk of that dual income goes straight to the bank just to cover your mortgage or rent, which, by the way, has also gone through the roof. You're paying 2024 prices with a salary that feels like it's from 2014. Then, there's the cost of having a second earner in the first place. It's not just pure profit. This shift didn't happen by accident. As women entered the workforce in massive numbers, a good thing for equality and economic participation, something else happened that nobody talks about. The economy restructured itself around the assumption of two incomes. Housing prices inflated to absorb dual income budgets. If households suddenly had two earners, they could afford higher mortgages. So home prices rose to match. Not because houses got better, because buyer purchasing power increased. The market took every dollar that second income provided and built it into baseline costs. Elizabeth Warren, before she was a senator, studied this phenomenon in the early 2000s. Her research showed that dual income families were actually more financially vulnerable than single income families from previous generations. They made more money but had less financial security. Higher income created higher mandatory expenses that couldn't be cut when crisis hit. The trap wasn't about lifestyle inflation, buying bigger houses or fancier cars. It was about baseline necessities becoming unaffordable on one income. Housing, healthcare, childcare, education, the non-negotiable expenses of middle-class life, all restructured around two income assumptions. The mortgage industry adapted to dual incomes. Lenders started calculating qualifying income based on both earners. This let couples borrow more, which let them bid higher, which drove prices up, which required dual incomes to afford. The cycle became self-reinforcing. The trap closes when you realize you can't go back. You bought a house that requires both incomes. If one person stops working, you can't make the payment. You can't sell and downsize easily because smaller houses also cost more than they should. You're locked in. Location makes it worse. Jobs concentrate in expensive cities. You need to live near work, but near work housing costs even more. The geographic wage premium gets eaten by geographic cost premium. You make more in the city but spend even more than you make more. Previous generations had options: extended family nearby, stay-at-home parents, lower housing costs that made single income viable. Those options have been economically eliminated. You can't afford to have a stay-at-home parent because housing requires dual income. You probably don't have family nearby because jobs moved you to expensive cities. The childcare trap has secondary costs. You're paying for care during standard hours, but what about sick days, school holidays? Summer? Each requires additional arrangements, additional costs, additional stress. Your entire schedule becomes a complex negotiation of coverage and backup plans. And the quality dilemma: cheap childcare is often inadequate or unsafe. Quality childcare is unaffordable. You're stuck choosing between financial strain and worry about your children's well-being. Previous generations didn't face this zero-sum choice. For dual-income families, health insurance is often tied to employment. You work partly for the insurance. Lose the job, lose coverage for the whole family. This creates golden handcuffs. You stay in jobs you hate because your family's health depends on it. The costs are everywhere. Premiums, deductibles, co-pays, out-of-pocket maximums. You can have good insurance and still face thousands in medical costs when someone gets sick. One emergency room visit can destroy months of careful budgeting. The trap tightens because health needs are unpredictable. You can't budget for them accurately. You need financial cushion for medical expenses, but dual-income mandatory costs eliminate that cushion. When the medical bill arrives, there's nowhere to pull money from. Previous generations had cheaper healthcare and more employer coverage. Many had pensions that included healthcare. Today you're paying more for less coverage, and that cost structure assumes you're earning constantly. Any income interruption threatens healthcare access. The debt payments are mandatory. They can't be discharged in bankruptcy. They follow you forever. For many dual-income households, student loan payments are the fourth largest expense after housing, childcare, and transportation. It's another fixed cost that requires both incomes. But the trap extends beyond your own education. You're also expected to save for children's college. 529 plans. College savings. The social pressure to fund children's education while still paying your own student loans creates a generational wealth extraction where you're paying for education twice, your own and your children's. The math is impossible. You owe $50,000 in student loans while trying to save $100,000 for your kids' college, while also funding retirement, while also paying the mortgage, while also covering childcare. Every financial goal requires more income, and you're already at 2 incomes with no more to give. This education cost structure didn't exist for previous generations. College was affordable. They graduated debt-free, saved for retirement, bought houses young. The timeline of wealth building was different. Today, student debt delays everything: home purchase, family formation, retirement savings, creating a cascade of financial vulnerability. When both partners work, you have to pay for the services that one partner, traditionally the stay-at-home parent, might have provided. The most significant of these is childcare. The cost of quality daycare or a nanny can be staggering, sometimes equivalent to a second mortgage payment. It's a genuine dilemma for many couples. Does one parent's salary even justify the enormous cost of childcare? On top of that, you have other work-related expenses. 2 cars, more gas, professional wardrobes, eating out for lunch more often because you're short on time. These costs add up quickly, chipping away at that second income. Let's not forget about student loans. Many professionals today on both sides of the partnership are carrying significant student debt. We were told that a college degree was the key to a better life and higher earnings, but for many, it came with a hefty price tag that follows them for decades. So before you even start paying for your present life, a portion of your income is already dedicated to paying for your past education. 2 incomes often mean 2 sets of student loan payments, creating a significant and long-term drain on your finances. Now let's look at taxes. This is a part of the trap that people often overlook. When you go from a single-income household to a dual-income household, you don't just double your income. You also often jump into a higher tax bracket. The marriage penalty can be very real. The way our tax system is structured can sometimes mean that a married couple filing jointly pays more in taxes than they would if they were single. So the government gets a bigger piece of your combined pie, leaving you with a smaller slice than you might have expected. That second income isn't fully yours. A good portion of it is immediately siphoned off. There's also a psychological component to all of this, what we can call lifestyle creep. When you start earning more as a couple, your expectations change. You feel like you should be able to afford a nicer car, a bigger house in a better school district, annual vacations, and the latest gadgets. Society, and especially social media, reinforces this. You see your friends and peers seemingly living this high life on a similar income, and you feel pressured to keep up. This isn't about being materialistic. It's about feeling like you re-achieving the standard of living that your hard work and income level are supposed to provide. But because all the fundamental costs we've discussed have risen so much, there's very little room left for these extras. The result is a constant feeling of falling short. So what does this all mean for 2026 and beyond? This trend is likely to continue. The fundamental structure of our economy has shifted. We've moved from a model where one breadwinner could support a family to one where two incomes are often the bare minimum to achieve a middle-class lifestyle. The problem is, the costs associated with enabling that second income have grown faster than the income itself. It's a vicious cycle. To afford the basics, both partners need to work. But because both partners are working, they incur extra costs, which then eats up the extra income, leaving them feeling just as broke as before. You're working twice as hard, with twice the stress, just to maintain a standard of living that feels perpetually out of reach. So, how do we break free from this trap? It's not easy, and there's no magic solution, but it starts with awareness. The first step is to stop blaming yourself. It's not a personal failure. It's a systemic issue. You're not bad with money. You're playing the game on a much harder difficulty level than previous generations. The key is to get intentional. You and your partner need to sit down and have a very honest conversation about your finances and, more importantly, your values. What truly matters to you? Is it the bigger house, or is it financial peace of mind? Is it the brand new car, or is it the ability to work a little less and spend more time with your family? You have to create a detailed budget. I know, the word budget makes everyone groan, but it's not about restriction. It's about control. You need to see exactly where every single dollar is going. Tracking your spending for a few months can be a huge eye-opener. You might discover that those small convenience costs associated with your busy, two-income lifestyle are adding up to a massive number. From there, you can start making conscious choices. Maybe that means one partner looks for a remote job to eliminate commuting costs and reduce the need for childcare. Maybe it means downsizing your home to drastically lower your biggest expense. It could mean aggressively paying down debt to free up cash flow. Or maybe it means consciously resisting lifestyle creep and finding joy in more affordable experiences. It's about redefining what success looks like for your family. Maybe success isn't two high-powered careers and a six-figure income. Maybe it's 1.5 incomes and a lot less stress. Maybe it's building a side hustle based on a passion that could one day replace one of your jobs. The goal is to get off the hamster wheel and start designing a life that aligns with your financial reality and your personal happiness. The two-income trap is real, and it's tightening its grip. But by understanding the forces at play and making proactive, intentional decisions, you can start to find your way out. It's not about earning more. It's about keeping more of what you earn and using it to build a life that truly feels rich. Thanks so much for watching. If this resonated with you, hit that like button and subscribe for more content on navigating our modern financial world. I'd love to hear your thoughts and experiences in the comments below. Are you feeling the pinch of the two-income trap? Let's talk about it. See you in the next video.